You are listening to Golden Rule Radio, your weekly discussion of the precious metals markets and the markets associated with the metals. I'm Rob alongside of Tori and Miles. Together we have almost 80 years of experience advising on and brokering the precious metals. Each week the three of us will provide you a technical analysis of the metals charts and cover the underlying fundamentals and the news that helps move and predict these markets. So without further ado, Miles, our chart monkey, get us started, buddy.
We're not doing that again, Bob. You call me chart monkey, I'll call you Bob. How about that? So, all right, guys. Remember last week things kind of calmed down a little bit when we were looking at charts. We're going to flip that over here, starting off with gold. Gold up 11.75%. When I put the charts together right before we started recording here, that's 11.75% since we recorded last Wednesday. That puts us at 5,390. And while we're live recording, I will certainly keep an eye to see if we break that 5,400 mark on gold today, as we're getting very close. So good week in gold. Kind of a great week in gold, but let's see how silver's doing. Up a paltry 25% in the last week, which is crazy to me. Silver sitting at $116.20.
I predict that silver will hit 120. How am I doing?
Well, there you
go. When did you predict that? This morning?
Just now.
He may still be wrong, but keep going, Miles.
Yeah, well, the volatility we're seeing, it could hit that while we're recording and then drop down to $85. Probably not, but man, it's been all over the place today, anywhere from like 110 to, I think it hit like 117 maybe at one point.
It did.
So, yeah, we're definitely seeing silver with some legs, and we'll talk about that in a fair bit here once we get through the rest of these charts.
Well, this program will be on YouTube each week as well, so you can see the visual charts and images, and the best place to go actually for that is our website, which is mcalvany.com/news. That's MCALVANY.com/news.
Okay, so the other white metals not to be outdone, certainly by gold at least, but platinum up 10.5%, so almost as much as gold. 26.66 at the moment. However, platinum was up at one point this week, 20%, almost breaking that $3,000 mark. I know it wasn't too long ago that platinum was $900. Now we're sitting just a little bit under 3,000. I think we got within 10 or 20 bucks of it a couple days ago. So platinum has been on a tear. And sister metal palladium up about 11%. Also put in higher price earlier this week, but currently sitting at $2,075 and not too shabby there as well. Paper markets, the S&P did have a rebound, had a pretty rough week last week, but we did have a rebound. It's back up 1.5%. The S&P did break 7,000 this week, so that is a new all-time high, currently sitting at 6,980. And all of this, I finally get to say it for real, is predicated on the US dollar being down 2.5%, actually as much as 3% at one point. Currently sitting at 96.36. So it's nice to see a little bit of reason within the madness. I like when markets are going up that the dollar is actually going down. I don't like it when everything goes the same direction. So it was good to see that the dollar is down, at least to explain, while we're seeing some of the money going over into the precious metals, even back into the equities market to try to push that back up. So, boys, I don't even know where we start this week.
Well, I think we start with Japan, because I believe that is the reason why we have the dollar down as much as it is and gold up as much as it is, because the U.S. government intervened in the foreign exchange market to prevent the Japanese from having to sell their treasuries, pushing yields higher. They directly injected U.S. dollars into the Japanese economy, into the Japanese government to keep them bailed out. And it was a bailout, signaling that Japan was in huge trouble, and we intervened to keep that from happening.
Yeah, and quite honestly, there's been really no concern with the dollar drop. This is part of Trump's playbook in terms of wanting a weaker dollar. So he came out and said he likes what the dollar's doing. You know, the dollar's down 10% in the year, and he really feels this is a way to stimulate. And to no surprise, we're likely going to close at all-time highs in gold and silver today. Gold's up 4% today compared to silver's 3.7% just today. Now, that has the ratio stuck right around 47 to 1. I mean, we were there last week when we were recording. Silver's getting all the attention and the love, but you cannot forget about gold's monetary role.
Exactly.
And geopolitical role, right?
Yeah.
And that monetary role means if the dollar's down, that aggressively, gold's going to outpace silver. And that's why we talked about being careful about riding the silver wave too long. They take turns, and those ratios fluctuate.
Good point.
The Western investors finally stepping in, and not only is gold going to close at an all-time high today, it's up over $207 right now as we record. It's on pace for its largest single dollar gain in a day and its largest single dollar gain in a month, over $1,000 for the month. And both of those are records as well. And silver ETF trading is exploding. The trading volume just in SLV, that's the largest silver-backed ETF, but that hit a record $40 billion on Monday alone, which is triple the previous peak that was seen in 2011. So you guys, we've talked a lot about the Western investor or the retail investor, if you will, not yet stepping in. Well, they're stepping in now, and we're seeing what's starting to happen with this late phase ramp up.
And looking at the world of money, the East and the West are both shifting towards gold. Our government is working with institutions to digitize and tokenize gold on trading platforms. And of course, the East is doing the same thing in their trading block. So we are seeing the world of gold changing from a reserve asset or an insurance policy to both East and West monetizing gold to one degree or another.
And now we are. The retail investor, the Main Street investor needs to do the same thing. If the government's not going to put us on the gold standard, we need to with our own savings. You have to do that because of the global M2 money supply. Rob, that's like your favorite target. The dollar gets weaker because the money supply grows.
Right.
So the dollar's sitting on its worst year in 8 years, and it's embraced. It's welcomed. And why is that? Because even President Trump, he said he easily could have pushed back on the recent decline, but he wants it to go. And he said it's like a yo-yo, that he can swing in either direction, and that he has that ability to swing the dollar. So if this decline in the dollar was so important, why isn't he reversing it? Well, because a weaker dollar helps drive looser financial conditions, right? Rate cuts, which, by the way, the Federal Reserve today voted to not cut rates. So like we predicted last week, 10 to 2, no change in the Fed lending rate. So rate cuts did not happen. That's the first time since the fall of 2025. But the second thing you get is higher GDP growth. So a weaker dollar gives you lower rates, better GDP growth, higher asset prices, which is most important. That's the inflation. But it also drives tax revenues, okay, because asset prices are higher. You have higher U.S. exports. You get a lower trade deficit, and you get easier debt servicing for the U.S. government, which we've got like 26% of the U.S. debt rolling over this year from a refinancing standpoint. Wow. And so all of that is necessary to see a declining dollar. We've talked on the show for a couple of years, you guys, about when do we see the dollar drop down back into the 70s or 80s on the dollar index? Maybe this is the move.
Well, it's interesting to me, you bring up the money supply. Like, I'm looking at both the available money supply as well as the velocity of money circulating in the M2, which is the money supply category that we all like to look at because that gives you sort of a broader spread of actual currency in circulation. But realistically, money supply inflation, we're looking at the stockpile of money supply topping at 21.7 trillion back in 2022. We're only at 22.4 today. So we certainly haven't seen the type of growth, the expansion in currency availability out there that certainly Trump would like. I mean, he'd like to see a lot more money in circulation because it gives the impression of a strong economy, although it comes at the expense of your kids and grandkids. I mean, we've talked about that for decades. But it's nothing like we saw back, obviously, COVID, where you're looking at money supply going from 15 up to that 22. where you have a 30% increase in the money supply over time. So the money supply increase really, I would argue, hasn't been exorbitant, and the velocity of money has increased. Go back to the same time, April 2020, and we talked about this back then, and I know we've brought up the velocity of money supply over time. But you're looking at money turnover, money changing hands dropping almost down to 1.1, which means money gets printed, it gets handed to one person, and then never touches anybody else.
Yeah.
And that's bad. That's bad for an economy, because when the Federal Reserve prints money, they give it to the banks, then the banks just put it in treasury bills. They say, thank you for the free interest, and we don't really care about the rest of the American public. And that was a problem back during COVID. So now we're seeing the velocity of money coming up. It's up around 1.4. Strictly just looking at the money supply issue, to me, it looks like we're not seeing the rampant growth that we saw post-COVID, but it's obviously not coming down. I don't know many presidents that are going to get in office and be super excited to put us into a deflationary swing for a period of time. It's real hard to get reelected if you go into a deflationary cycle. But the velocity has come up. The supply has come up a little bit. That does lean into some stability, and I think that's why we've seen the dollar holding for the last couple of years in a relatively reasonable range, and things haven't gotten catastrophic. Now, what has happened is our cost of living has gone up significantly for the average American, and we just saw the price of gold more than double and the price of silver triple to possibly quadruple coming up here soon if we do get your 120 on the silver price, Rob. Because we started this, 12, 16 months ago at $30 silver. Mm-hmm. So I think what we're seeing right now is not silver or gold jumping out ahead of the market as the next big major bull rush. I think this is just the thing we've been talking about for years. It's time to play catch up. And I think the metals market is finally playing catch up with the damage that was done to the rest of the market over the last 5, 6, 7 years.
Well, it wouldn't surprise me to see the Fed balance sheet expand as they have to refinance roughly $8 trillion. So they're either going to have to buy it and put it in their balance sheet or print the money. And it's only going to weaken the dollar going forward.
Well, that's where the money supply boost comes from. I mean, you can create credit lines, you can create cryptocurrencies and things out of thin air, and that's partly true. But from a traditional standpoint, it is the Federal Reserve creating those digital numbers. And you'll see their balance sheet has started tilting up after this 4-year downtrend of this quantitative tightening and shrinking of the balance sheet. And you guys are both right. It's starting to tip up. And all asset classes. Like the problem with the weaker dollar is if you sit in cash, if you sit in dollars, then you're missing it. You're going to suffer if you don't get out of US dollars. You have to own assets or you're going to get left behind. And that's what's going on around the world right now in the physical metals. They're just one asset class that you can own. Real estate is not the target area. It's still kind of frozen between rates and home values and people not wanting to refinance at higher rates. The rates would have to come down lower to really see the housing market start to move again, I think. And then the dollar supply also impacts all asset classes, including the equities. So talking about the fact that they're also doing incredibly well, but the stock market could arguably be overvalued. I mean, we're seeing 45% of global equity markets hit all-time highs over the last month when measured in their local currencies. Mm-hmm. So that's the highest since 2007. Remember, the financial crisis hit in 2008. Well, same thing in dollar terms, just in terms of the U.S. dollar, 35% of markets reach records. That's also the strongest reading since the 2007 peak. So where do you go with the money? You've got to get out of cash, but where do you go? Because everything's in a bubble. There are very few opportunities that are not in a bubble, that may be the next best asset class, but it doesn't show any signs of halting the gold price climb.
Oh, no.
Especially when the president's saying he thinks the dollar's doing great. That's his word. He thinks it's doing great. Well, it is doing great as far as the
doing what
objectives.
he wants it to do.
Yeah.
And if it's what he wants, then it's great.
It's great.
Yep.
Yeah.
Okay, so the velocity of money thing right there with what you talked about. Equity markets are all hitting all-time highs right now. Well, the velocity of money has gone up to 1.4. So that means 100% of the money touches one other person. 40% of the money touches a second person. So if the investment banks who get the money from the Federal Reserve don't immediately dump it into their own investment pools, that's going to help prop up the equities market, obviously, because that's money that's going straight from the Fed into the equities market or into the Japanese carry trade, which, Rob, we started the conversation off, and I think it's worth coming back to. And then maybe half of what's left in the money ends up making its way out into the market. So that's where the money is going.
Well, it's coming to gold too.
Yeah,
Miles, it's
into
coming
the
to gold,
markets.
too.
But
Yeah.
it's not going into your and my gold. It's not making it all the way down. Trickle down economics only works if the money actually trickles down. If you've got an
Yeah.
umbrella up there catching everything, sure, it's going into gold, but it's going into JP Morgan's gold. It's going into the Bank of China's gold. So it ain't going into your and my gold.
Yeah. Well, in the U.S., that M2 money supply is growing at 4.6% annually, which tells you better count on 4.6% inflation from a cost of living
Right.
standpoint. Like
At
that's
least.
just kind of the floor, at
That's
least.
yeah.
But to your velocity of money standpoint, again, people are frozen because it's like, what do I do? Where do I invest? Where do I put it? There's over $8 trillion sitting in money market funds. The only reason you're sitting in money market is you're waiting to deploy those funds into something. Mm-hmm. Imagine what happens to asset prices, including the precious metals or stock market, if $8 trillion gets deployed. Or the real estate market. Is it one class? Is it all classes where happy days are here again? And watch that 4.6% inflation rate explode when $8 trillion more dollars start ramping up in velocity. It's already been created. It's just not moving. Well, the Federal Reserve is going to obviously cause a little bit of a pause in the moving of the monies, by not
Should.
cutting the rates. Yeah, cutting rates, that's why it's so dangerous, because you do start to ramp up the velocity of money. But they did halt the rate cuts for the first time since July of 2025, like I said earlier. But they agree that inflation remains somewhat elevated. They're trying to reassert their goal of getting that 2% long-term inflation in place, which they haven't achieved that for almost 5 years, but partly because of the unemployment. But now the unemployment rate is starting to show, quote, some signs of stabilization, unquote. So the labor markets are cooperating.
So they've finally redefined unemployment to the point where it shows the number they want. That's awesome. I'm being sarcastic.
There you
Sorry.
Well, and you've got this X factor coming of this new Fed chairman. Who's Trump going to appoint? He's going to appoint somebody that wants significantly lower rates, that would absolutely quantitatively ease, say that he'll get or she will get creative with the Fed balance sheet. Well, that's all pointing to one person right now, but I think they're desperate because what we've seen is that this increasingly unserviceable debt and these interest payments on our debt is just not, something that can easily be overcome. They have to get the U.S. reindustrialization going, and the only way they can do that is through a substantially lower dollar now, because the tariffs haven't stimulated it yet. I think there's too much concern that 3 years when this administration turns over, all of this could just be undone by the next administration. Why is corporate America going to pour billions and billions and billions of dollars into reindustrializing in the U.S. without there being a longer term picture? So, but unfortunately, this strategy of a weaker dollar did not work in the 70s. It didn't boost U.S. manufacturing, but it did lead to historic highs in inflation and interest rates, and that's nothing that we want. Things start getting a lot more painful for the average U.S. citizen if inflation starts to ramp back up like it did in the Biden years, combined with obviously higher interest rates.
Well, I think on a positive note, the cost of energy is dropping, and that's going to help the average citizen. It's going to cost less to drive their car and put food on the table. So we can see that happening now. But the biggest problem I see isn't just the interest on the national debt, which is huge. It's also having to refinance 26% of the debt this year. If the markets don't see a stable government moving forward, which we will know come November, if this administration's policies are going to continue with the midterms, if they don't turn out the way that the financial markets are hoping for, you are going to see a major dislocation in the U.S. stock market. It's just going to happen. I will make that prediction.
Along with $120 silver.
Well, yeah.
At the same time. All on the
Preston
same
says-
day, Rob. It's going to be your vindication day. All of Rob's predictions come true on the same day. I'd like that.
Well, listen, the financial industry and industry as a whole is very excited about this administration's policies, the deregulation, the drill baby drill, the opening up of all kinds of asset classes like Lutnick and Besant are talking about. If that policy cannot be continued for at least the next 2 years, watch out.
Yeah,
Yeah.
well, we've been talking about that for the last year occasionally on the show. The time it takes for policy to make its way down to the Main Street level is years, sometimes decades. And the way American politics works nowadays, we've really become a country where half the people just, you run the country however the heck you want for 4 years, and then the next guy comes in and he just deletes everything you did and runs the country however they want for 4 years. And there's no consistency.
Well, that's why they need to codify so many of these executive orders through Congress.
Right.
Yeah, I don't know if that'll happen or not. I don't know that he's got the support. I mean, we'll see.
We'll see.
Some of the longer term vision stuff, that would be helpful. And in the meantime, it's still a currency world, right? It's still all about global GDP. It's still all about U.S. dollar as a world reserve currency. What's the dollar doing? What are individual bond markets doing? I don't feel badly for Japan because they've been the grand experiment for decades in terms of how far can you push your debt to GDP ratio? Like how much debt can you incur above and beyond the actual economic revenue that you're generating? And they're showing that you can. I mean, the 30-year yield hit 3.43%, which doesn't sound terrible, but that's an all-time record. So is the 40-year at 3.76. Again, all-time record. And the Bank of Japan now holds unrealized losses of almost 33 trillion yen. Now, they're unrealized, right? But that's devastating. That's why you have to stimulate the yen. And for the first time ever, their interest payments exceed their income. That's bad. Imagine your interest payment exceeding your income. You're making no gains, in terms of debt reduction or any equity. And that just tells us that the 3-decade-year-old Japanese bond bull market is over. It's over, and it's going to cause a restructuring of the global monetary system.
But they were
Yep.
also propping up our bond market through the yen carry trade. Can you
Yeah.
unpack that for listeners?
No. What did you say?
That might be,
Margarita
next show.
Nice try.
I threw the ball at you, Tor.
I'm not David McElvaney.
Yeah. We got like 2 minutes left, Rob. You can't throw that at him in the last.
Yeah, we do. We got like 2 minutes left. Well, a lot of the expectations for the metals prices to continue climbing have been the physical demand. And yes, we're seeing that certainly in silver. There's a lot of talk about what silver is being used for. And now with the price increases, solar panel production costs have obviously understandably skyrocketed due to the silver price skyrocketing. And now silver reflects a record 29% of the total solar panel production cost. So that's big news, which tells you at some point they've got to try to get the costs under control because that's up 15% from last year. So that makes solar panels more expensive. That's a market that they want to see grow. But China's net gold imports fell 24% in December, and nobody's talking about that either. Like they imported significantly less, even though in China premiums and retail sales soared in January. It's not like the public appetite has diminished, right? But at some point, we will pause here. We will take a breather. Reality has to set in, and that can be offset by geopolitical concerns. I mean, here, we had the Venezuela event a couple weeks ago, and Trump just said there's a massive armada heading to Iran, and, quote, like with Venezuela, it is ready, willing, and able to fulfill its mission, unquote. This is this morning. And he's saying time is running out, make a deal. The next attack will be far worse than the one that we did before where we were bunker busting their nuclear sites. And so that's the next thing to happen here. And watch what gold does when you see increased geopolitical tensions ramp up. Again, that's when that gold-silver ratio starts to reverse and start climbing again. And we'll see what plays out.
Well, I think that's going to do it this week, fellas, for Golden Rule Radio. As always, we appreciate everyone stopping by and joining us each week. If you liked what you heard, we encourage you to head on over to our website, McAlvany.com. That's McAlvany.com. And you can find some additional info on precious metals investing with McAlvany Precious Metals. As always, you can find us on Twitter at ICA Gold and Facebook at McAlvany Financial. And if you'd like to speak with one of the advisors here about your personal portfolio, you can give us a call at 1-800-525-9556. Thanks for listening and have a great week.